Welcome back to Wealth and Wisdom. We've been talking about Libor with Simon Brown of Just One Lap. So, Simon, what exactly were these guys accused of doing, these guys at Barclays, with the Libor submission that they've been getting in so much trouble for?
Essentially, I mean, the story started because what happens is you get a phone call, I think it's about 11 o'clock or 10:30 in the morning from Reuters, what is your level? And they were basically submitting fake levels, high levels, and then they got a phone call from the Reserve Bank, or the English equivalent of it, and suddenly that rate came down. So the theory is that they were completely manipulating the number. And that's part of the bigger picture is lack of transparency. What we're used to is central order books on the JSE and complete transparency and the like. And here it is, a phone call to someone, and the theory is that he was turning to the room and saying, what rate do you want us to submit today? And they were basically making it up, and in essence. And it goes to the point that there must have been more, because 1 of 16 couldn't have worked. That then was giving the outliers and fudging the ultimate number that came through. And when you look at it, and admittedly in hindsight, you can just see that these numbers just don't stack up. They don't make sense.
So, Simon, in South Africa we have Jibar. What's your understanding of Jibar and the differences between it and Libor?
Two key differences. It's an agreed rate. In other words, it's a tradable rate. You can trade at this price. Libor is an offer rate. In other words, it's a theoretical price which could or could not be traded at, and very often isn't traded at. So it's a real number. That's critically important. And there's better levels of disclosure post the agreement. It's 9 banks locally who do it, and we again take out the high and low numbers. All that data is therefore published. The key point is agreed rate, tradable rate, therefore not this theoretical, a much realer number in the financial sense.
And some of the calls they've been for more transparency to sort of improve the numbers in Libor. Do you think that could help?
I think we certainly could. I mean, in the local space, we get a lot of transparency. I think in Libor, certainly there could be a lot more in terms of publishing the data. In terms of, again, not in any disrespect to Thomson Reuters, this should surely be handled by a financial organisation such as the equivalent, the FSA, which is the equivalent of the FSB, or maybe even the British Bank of England.
Somebody
like that.
It's so important, that number. I mean,
it's a critical number. And as you said, there's trillions and trillions of dollars in terms of derivatives and debt instruments and loans that are riding on it, that you would think that they would take it quite seriously and really manage it and give us that level of transparency.
And I mean, what do you think it's done at the moment for the image of bankers around the world?
Look, images of bankers have probably always been slightly skeptic. Everyone's like, the bankers, etc. And then we can go back to any time. No one's quite loved bankers unless they're lending you money at a good rate. The crisis certainly hurt bankers. I think we were getting back to a level of normality. I think this really has, the public has turned around and said, see, told you so. We knew there were issues around the crisis. I think this has probably tarnished it even more so. It's been a huge story, certainly in the UK when it broke. It was absolutely massive. And it went onto mainstream TV.
And that fascinating story there with the Bank of England getting involved and telling these guys that they needed to lower it. I mean, we've got a wonderful graph up here. I mean, you can see there, this is the Paul Tucker, who's now the Deputy Governor of the Bank of England, phoning Barclays and saying your rates are worrying the market. There's sort of problems there. You don't always have to be the highest number. And you can just see immediately after that, boom, boom,
massive
boom.
response. And that then says to the general public out there, told you. These guys are colluding, and what are they doing? They're colluding against the general public in their own interests, in their own favour. And I think it has, it's been a tough number of years to be in the banking industry. This, to me, really has come as a really bad thing that happened really at the wrong time. And I think, if anything, it's further tarnished an image of bankers, which has had a very, very tough 4 years.
They've had a very tough 4 years, and they continue to do so. So, I mean, Simon, do you have any trading ideas around this? What do you think you could do? Are there ways to make money from this sort of ongoing scandal? I mean,
in essence, there is. And I mean, one of them, I suspect, is, and we were talking before we came on air, is good old Barclays, who've been absolutely hammered on it. They've borne the brunt as if they're the only one. Now, my sense is the news is in. We know what Barclays did. They've paid the fine. That is now absolutely and completely behind them. I think there are potentially other banks out there. So certainly a position in Barclays is probably an attractive point of view, saying that the West is behind them. The news is now there. It's going to take a bit of time. They're not going to rally in a hurry. And then you were saying, and then what about the other banks who might get hit? The HSBCs and the like. Take short positions in them because they've still got
pairs trade.
They've still got the bad news to come along and hit them.
So it's
that's going to hurt.
It's that old buy the rumor, sell the news.
Exactly.
Except in this case, we'd probably be going short. So we're selling the rumor and buying back the news.
We're saying that these other banks, the other bank names are going to pop up. We're not sure which ones. So go short a couple of them. As those names pop up, then the prices will depreciate and you can then exit.
So here we've got the graph, another graph we've got of these numbers coming through. Fascinating thing is, I mean, this is sort of Lehman Brothers collapsing, the rates spiking up September, then suddenly October, everything's hunky-dory again. Within a month or so, you can see these Libor rates coming right down.
And I've got to say, I mean, Lehman Brothers collapse was, I remember that. I remember being on air. It was dark and scary.
It was very scary.
It wasn't suddenly sunny in October. Yeah. It was still pretty dark and scary. It didn't really get sunny until Alan Greenspan in March of 2009 mentioned green shoots. And that sent the market going.
That was the beginning of
But there was still
the
some skepticism that would these green shoots grow or would they wilt and fade? And I got to say that sudden improvement sort of into October into November, from what we're experiencing on the ground, doesn't make a heck lot of sense.
So to put on your trade idea as a South African trader, how could you do that? I mean, is there any way you could do that on the
certainly
JSE?
You can. I mean, you've got the IDX international derivatives, so you can go and do derivatives on a number of the UK banks. You could go for proxies, but I would say I always like clean. In other words, go and do the long on the Barclays and the short on the others. So your broker would be able to facilitate that for you as long as they're a Safex broker, enable you to go long Barclays, make money on upside on Barclays, and short a handful of other British banks that are available so that you can make money on the downside when the bad news hits. It's not going to hit in all of them, but it's certainly going to hit some of them, is my view.
Some of them, definitely. Simon, thanks very much.
Always a pleasure.
Next week, we're going to be looking at some of the ongoing issues around the world, including the European debt crisis, and possibly looking at a drought in the United States, which is having a big impact around the world.
Choice. It's a wonderful thing. Sometimes it's an easy choice. Sometimes you have no choice. Happily, JSE Safex style options give you a perfect choice, giving you the right, but not the obligation, to buy or sell stocks at an agreed price on or before an expiration date. Or you can just walk away. JSE Safex style options, a great choice.